Hello, folks, and welcome to the Defiance Ventures podcast. My guest today is Emir Dukic, founder of Rabbu. I don't recall exactly when I met Emir. I know it was last year, but I heard his name from 6 or 7 different people in about the same week. Nowadays, when I meet new people in his industry, I mention his name, and almost every time I do, the people already know him. He's a lot of fun to talk to in general because his mind moves very quickly. So I'm really excited for this interview. Emir, thanks so much for joining me today.
Thanks for having me, John. Honored to be here.
Awesome. So can you tell the listeners what Rabbu is?
Yeah, absolutely. So Rabbu is a flexible asset management platform. What that means is we partner with property investors to turn their rental portfolio into higher yield returns through flexible rental strategies, so non-traditional rental strategies.
Got it. That was a lot of big words, Emir. I'm going to boil it down to something somebody not as smart like me might understand. You basically go to AirBNB and short-term rentals to drive up revenue. So it's less long-term rentals, but you're managing that headache for apartment owners.
Correct. So what we would do is we would come to a property investor and say, hey, you have this portfolio, or you're looking to grow your portfolio. We'll take that portfolio and actually amplify it by utilizing non-traditional strategies. So it used to be primarily short-term rentals, but even over the last few months through COVID, we've learned that there's a need for what we're calling midterm rentals, stays from 30 to 180 days of furnished homes. So we've actually started diversifying of not just going after short-term rentals, but also going after medium-term rentals. And we think there's an opportunity even for some longer-term rentals that are furnished in our model.
Excellent. And I know I've stayed in corporate apartments in the past as a consultant. Is that the type of client that you're often servicing in more of that midterm rental?
Correct. That is the type of client. We really found a niche once COVID started. We saw a significant decrease in demand for actual vacation, leisure travel. So we started proactively marketing towards guests that needed homes for a few weeks to a few months at a time. And what we found was a significant need for people that are either in between homes. So let's say they sold one home and they're looking to buy their next home, and they had a 2 or 3 week time period that they needed a place to stay and they didn't want to stay in a hotel, or people that are on a work assignment, or people that are getting renovation work done to their home, or visiting family. It could be various things. The biggest, though, that we're seeing over the last few months, especially as a result of COVID, with remote work, people can be anywhere in the world. So what we're seeing is people are leaving cities like New York and San Francisco, and they're finding a better quality of life elsewhere. They're getting out of their 600 square foot apartment that's costing them, $5,000 a month, and they're coming to a city like Charlotte, staying here for 2 months for significantly less than that, and then they're going to Nashville, they're going to New Orleans, Austin, wherever the case may be. It's opened up a new lifestyle because they can be anywhere and work. They're not tied to the headquarters.
So you're based in Charlotte, but I take it from what you just talked about that you've got clients all over the country. Is that true?
Correct. So we have 2 models in which we work with our clients. We have a model where we manage the properties on behalf of property investors. So we will, help them procure a property, find the property. We will then manage that property as an asset on their behalf and eventually help them dispose of that property for a yield and a higher return. But we also have built our entire company around a proprietary tech platform that allows us to operate internally as operators. And we are now also licensing that technology out to other operators who are trying to take advantage of the same space, the same opportunity that we're seeing for revenue.
So are you a broker as well then for that first part of the business?
Not yet, but that's part of our most immediate goal. I'm actually taking my real estate class right now, partially because it's online and I don't have to attend in person, but I'm taking that class right now to make sure we get to that point, because there's also an opportunity for us to participate in a transaction long term.
That's great. So you mentioned 2 lines of business there, or 2 parts to the business. In my mind, you pivoted at some point. Is that when you went from the first to the second, or was there something else that was going on?
I feel like as an entrepreneur with a startup, you're really constantly evolving. Sure, some people call it pivot, but what you're doing is you're taking in data on the market and understanding where some of the demand may be, and you're adjusting and testing opportunities based on the data that you're gathering. So I feel like we've evolved or pivoted on numerous occasions. The first was when I first started, what our model was is we would go in and we would sign a lease on a property and rent that property and then turn it into a short-term rental. that became very cash intensive because we have to, we have to pay for the security deposit, we have to pay for the lease, we have to furnish the property, and we started having demand of property investors actually coming to us and saying, hey, we want to participate in the upside of some of these non-traditional revenue models, but we don't know what we're doing. We don't know where we get started, what to do. So that's when we started pivoting into more of a service model where we help others achieve the same goals that we're achieving internally. It was less cash intensive for us and provided more scale in our minds.
I was going to say, it sounds like a more inherently scalable business.
Correct. Yeah, it is in a sense. The biggest problem we occurred there is that we weren't willing to sign leases, and there's groups in our space that were willing to sign leases, and fixed leases were a lot more appealing to a lot of groups, a lot of our customers. So that created a few issues, to say the least, but we focused on, at that point, we focused on building out technology and operations to really be able to serve our clients as necessary, as opposed to just investing money into acquiring properties and renting properties. We wanted to make sure we had a scalable long-term business in place.
That's great. So do you think of yourself as real estate or commercial real estate, or does it actually matter?
Commercial, I would say commercial, just because we don't work with somebody who has a second home and they're trying to offset their obligations. We really are. We're trying to commercialize the space by saying, okay, we will help you acquire the right properties that are going to generate you a higher yield than you would get from your traditional paths. Very
interesting. Yeah, the line is kind of blurred.
It is blurred. It is blurred. But we found, we used to serve, traditional, second homeowners in vacation markets, and what we found there is that those, while we understand their need and what they're looking for, they really have more of an emotional attachment to the property. And if one thing is out of place in between tenants, it becomes a big deal, and they're not as sophisticated from a numbers perspective. Mm-hmm. So what we're really trying to do is shift towards more of the real estate asset class, which is the world's largest asset class and the best producing asset class, and start to institutionalize our offering more so than we have to date.
So you're selling to more multifamily owners?
Multifamily owners, professional real estate investors that have over 10 properties. We're kind of taking baby steps. We started off with a friend that had one property. Then we've started working with property investors that have 1 to 5 properties. We've kind of graduated into 5 and 10. We have some clients that have hundreds and some that have thousands. And we're really trying to get more of a foothold with the larger groups, with the institutional groups now.
That's great. How did you get into this business in general? How did you decide to start Rabbu?
Yeah, that's an interesting story. So my background, I moved to Charlotte in 2004, went to UNCC, got a civil engineering degree. It was an interesting story. When I came to Charlotte, started an engineering program that told me, look around during my freshman orientation. I said, look around. There's 2 things we'll guarantee you. 1, 66% of the people around you won't be here when you graduate. People are going to drop out the civil engineering program. 2, you'll never have to worry about a job. Mm-hmm. We're like, okay, cool. Well, I'm not worried about 1. I'll figure it out. Great. And I'll have job security for the rest of my life. So I accomplished 1. I graduated in 4 years. Mm-hmm. And the bad thing about that was it was 2008. Not a great time, right? Not a great time to graduate in a construction related business, right? With the downturn, I was still able to secure a job by kind of hacking my way into one. Basically, I saw all the companies that were coming to a job fair, applied to them before, and started reaching out to them before the job fair while others were waiting for a job fair. So I got a job, did that for about a year, and I was part of the layoffs. So I lost my job. And then I was, this is 2009. I was kind of sitting there not knowing what to do with myself. And was able to eventually join a couple of other engineering companies. But what I realized is I really don't enjoy this. This is not fun for me. I'm pushing paper. I'm translating what these guys out in the field are doing. And it wasn't fun. Honestly, I started becoming depressed, having anxiety. It just wasn't fun. So I was desperate, wanting to figure out what to do next in my life, and I randomly came across a Twitter post by this used to be a former Panthers beat reporter that mentioned, "Hey, so happy for my friend who's joined this soccer startup in town." I'm like, "Soccer startup in Charlotte? What? I'm European. Soccer is my number one sport, my number one passion. I'm like, I have to figure out what this is." So I heard about the startup that got started by Mac Lackey. Mm-hmm. I'm sure you're familiar with Mac. He's a local Charlotte-based entrepreneur who's had multiple successful exits companies. So
yeah, I'm very good friends with Steve Emilio.
oh yeah,
Steve
so they've
and Mac
done
running the same
they've done
mafia.
multiple things together. Yeah, him, Steve, Mac, and Ross.
Ross
right?
Alvarini.
Yep. That was kind of the OGs almost in Charlotte, right?
Yeah, Chris Williams runs in that crew as
Yep.
well. There's a whole, we call it the Emilio Mafia, but it could just as easily be the Mac Mafia.
Yeah. I can't say it. Mac would get upset if I call it anything else but the Mac Mafia. But yeah, Immediate Mafia. But so I joined Mac, and what I did, I approached Mac and I said, "Hey, Mac, I really want to become an entrepreneur. I'd love to help you out any way I can. Let me like provide support for Kick. I'm willing to do it for free while I'm doing my thing as an engineer. Just trying to find a way out of the industry, out of engineering." Into the startup world. So Mac, of course, being an entrepreneur, is like, oh, I can get free support. I don't know how good this guy is, but I'll take him. So I started doing some stuff for Mac, and kept asking for more responsibility to the point where they made me an offer to join the company. Initially as a business associate, I joined the company. Took a significant pay cut, but I was fine with it. I just needed to get out of like this headspace that I was in of not happy and doing things that were just driving me crazy. Luckily, my wife was supportive, knock on wood. So I joined Kick and, started off as a business associate and kept asking for more responsibility. I, at one point, started managing the development team, became product owner. And then at the point that Kick was acquired, I was the VP of operations, basically.
Oh, cool.
Number 3 at the company after Mac, our COO, and then it was myself. And Kick got acquired by NBC Sports. So I joined NBC Sports as part of that path, but I started thinking, okay, what do I want to do next? What's next for me? I got what I wanted from Kick, which was really a crash course in entrepreneurship and what it's like to be part of a startup.
Well, you got paid to get an MBA is what you really got.
Absolutely, right? And I respect people that get their MBA. It's a great path to go. An alternative path is to go actually apply yourself, hopefully get paid, even do it for free. Honestly, it's still cheaper than getting an MBA at a startup that's establishing itself. So I did that, Kick got acquired, and I started thinking, okay, what do I want to do next? I signed on for a 1-year commitment to NBC as part of that acquisition, but my idea was I was remote. I was based here in Charlotte. The division we were reporting to was in Minneapolis, Minnesota. So everything we were doing was remote. I could find time to figure something else out. And I started playing around with a couple of ideas. One was a drone videography business that I started playing around with. The other happened by chance. So around the same time period, my wife and I purchased a house in Plaza Midwood. That house had a detached garage and a room above the garage with a bathroom. An ideal case scenario, man cave, big TV, foosball table, bar, kegerator.
I thought they call that the mother-in-law's quarters.
Yes, right. It wasn't going to work out. I realized quickly, the more I pitched to my wife, the less of a chance I had of actually making that happen, because at that point we had a 2-year-old and a 3-month-old, and it just wasn't going to be good for us. So, being an entrepreneur at heart, it's like, okay, well, what can we do with this? We tried to get a long-term tenant in there, but it didn't have a kitchen, so we weren't going to get a lot of money for it. So we decided to furnish it nicely and throw it on Airbnb to see, hey, let's see, maybe we can make some discretionary income off of this. It'll be great. So next thing we know, this 200 square foot room above our garage is paying the mortgage on our house in Plaza Midwood. Like, okay, decent ROI here. So always thinking scale. I started looking into opportunities to get more properties, and the easiest, least capital intensive way was through arbitraging. Basically, what I did is I would start going out to homeowners and say, hey, John, I know you have this home that you're looking to rent out for $1,200. I'll pay you a 10% premium. I'll pay you $1,320 as long as you're okay with me turning into an Airbnb. I'll always pay you on the first of the month. I just want you to know I'm going to put it as an Airbnb.
Did people push back on that, or?
Most people did. Most people thought I was crazy. I got cussed out multiple times, like, go buy your own fucking property, leave me alone, all that kind of stuff. But you're just used to it as an entrepreneur. It's just data, right? Yeah. Check, got it. And then the first person that I got to work with me was another fellow entrepreneur that has a business in town building housing for students. So he's like, oh, I love the way you're thinking about it. I'll go, let's do it. I want in on the upside. So that's how we started. We got to about a handful of properties in that model and realized, holy shit, this is a lot of work. And we're running.
How dare you? This is a children's program.
I apologize. I was thinking if I should, edit myself, but I'm like, I'm sitting across from SB. Probably don't have to worry about that.
You probably don't have to worry about that.
So I said, holy shit, there's money to be made here, but I am running a geographically dispersed hotel, and it's impossible to do this at scale. So I went to one of the guys that was with me at Kick, who's our head of development at Kick, and I said, James, hey, I'm working on something. This has got some really good traction, but for this to become anything, I need to automate and scale most of the things that I've done. So I tapped him on the shoulder. He's like, cool, I'm in. Let's do this. So that's how we get started.
That's great. And I want to come back to that question about the hotel, because that's one of the ways I've thought about your business. But first, you mentioned Airbnb. Airbnb is obviously a big part of your business model. We are in a COVID era where a lot of things seem to be changing. Have things changed for you in a COVID era, particularly as it relates to Airbnb?
Yeah, it's been an interesting experience. So what happened, I think it was St. Paddy's Day weekend. We were rolling strong. We had made some significant progress on some of the goals that we had for this year. We were checking off every box. We had some strong traction. And I think it was March 13th of this year where Airbnb we were still getting about 90% of our traffic, 90% of our tenants through Airbnb. And Airbnb announced this universal policy that said, if you have a reservation in the next 2 months, you're free to cancel it free of charge. Mm-hmm. You will be fully refunded all your money that's due to you. And we're like, we agree with this. I mean, it was the right thing to do at that point in the country, but shit, there goes, six figures worth of revenue for us overnight.
Wow.
So we started seeing these cancellations come in for the next 2 months, and my executive team and I got together. We started brainstorming and started theorizing what we wanted to do, what we think the next quarter is going to look like.
And how long ago was this?
This was March. So This was like middle of March. And what we theorized was, okay, we're going to see a significant decline in travel over the next 3 months through July. We need to be proactive and start finding a different type of tenant to get into our spaces. So what we did is we proactively recreated all our listings, wiped their calendars clean, and started marketing towards midterm tenants, people that needed places to stay from 2 weeks and beyond. Initially, we were looking for people that were quarantining and were trying to self-quarantine. And we started getting some of those, but then we started getting a lot more of the organic people that were in between houses, that are just moving to Charlotte for a job. Like, wow, next thing we know, we are at 95% occupancy.
And how are you acquiring those customers? I'm assuming it's all digital. Are you buying ads? Or
buying ads, Facebook
okay.
ads. We recreated all our listings and we basically copied them, but set different rules to them and started pushing them out. We did some media. We created a Rabbu Cares campaign that basically said, hey, we're discounting our homes significantly to give people that are in need a place to stay. And that worked out really well. We were able to fill out our homes. And like I said, our occupancy at some points was 95%.
What do you target?
65.
65, wow.
Now, the nightly rate was lower because we did have to discount the rate, but the big statistic in our space to realize how well you're performing is revenue per available night. Basically what that means is, let's say you have 30 nights available and you charge an average nightly rate of $100 of an actual book property. And if you have 60% occupancy, your revenue per available night would be around $80, something along that sense. Well, we got 90% occupancy at $80, which got us to the same number. So the property investors that we worked with, that we were generating revenue for didn't see any kind of dip in the revenue for them, which was a huge win for us in this time period.
That's awesome. So how long have you been working with Airbnb?
We've been working with Airbnb. So my wife and I started our first kind of garage apartment. I think it was April of 2015. So a little bit over 5 years, really started taking this seriously in 2017. And just to go back to your previous question, the other thing that we've seen over the last few months, especially over the last month and a half, since we went to phase 2, basically, of the reopening, our demand for short-term rentals, people staying for a few days at a time, has come back tenfold. So we have multiple dashboards in our office that shows kind of the activity and the demand for our units, and you could see the views of our properties. There were about 600 views per day pretty consistent from January through late May, and then all of a sudden they jumped out to 6,000.
Wow.
So what happened is that
that's 2 orders of magnitude.
yes, it's unbelievable. And what's happened is that people, they have been stuck at home, they've been looking to get out, and destinations that they can drive to that are not hotels, that are homes, fully furnished homes where you have privacy, where you have separate quarters for bedrooms, for living rooms, for kitchens. Just much more appealing in a time like this. You're not stuck in a hotel in a small room with hundreds of other people from all over the world. You have a home private space to yourself. So there's a significant return of demand, especially in drive-to destinations, places where you don't have to fly to, for a short-term rental product as well. So our average nightly rate curve went from about 2.5, 3 nights per stay on average, jumped up to all the way to 28 nights per average, and now it's about 7 to 10.
Wow, that's a huge difference. So 5 years with the Airbnb. What's changed in that market in the 5 years you've been working with them?
There's been a lot of people that it's become. There's a couple of things on the consumer side. The consumer has gotten older. So 5 years ago, it was only something that like the 20-year-olds would do.
They went from Snapchat to Instagram to Facebook.
Absolutely, exactly. So Airbnb, from a consumer side of things, from the tenant that's actually the guest that's in the properties, it's become older. As kids have started telling their parents this is safe, this is the right way to go. So the tenant has become older. And then the host has also become much more professional. It used to be, hey, I have a spare bedroom that I'm going to rent out. We're seeing a lot more people that are trying to professionalize this space with,
It certainly feels like it as a consumer of Airbnb. I've stayed at 3 or 4 during the COVID era, and it feels like every time I go, there's no awkward exchange of keys anymore.
Right.
They've got that figured out. They've got all the documentation. They've got the processes down. It does seem like there's much more professional. I don't know if you'd call them professionals, but owners who are thinking explicitly about Airbnb.
For sure, and it's very much become a strategy on how people travel. Mm-hmm. It's become a normal. I don't know the last time I stayed in a hotel. Now, of course, I'm in this industry, but I have 3 kids. And when we travel, staying in a hotel is just not an option. So we always stay at homes in Airbnbs. And like you said, it's become more professionalized. There's a lot of technology and advancement made in the space. We've invested into a lot of technology ourselves to make everything as seamless and as self-check-in as possible. So we do things like, once you book, we verify your identity by having you upload a picture of yourself next to your ID so that we know you're the right person that actually booked the property, so to prevent fraud. And then only then will we actually give you access to the property. And we've built a IoT platform that then allows you to access the property with the last 4 digits of your phone number, and it only works for you during the time of your stay. And
That's
we're
awesome.
seeing a lot of that kind of professionalization, just making it more of a natural experience as opposed to having to go meet a host, exchange keys, or find a lockbox kind of hidden in like next to the dumpster, and find using the code that other people have used to get into the house.
So in a more commercial real estate setting where they're borrowing from commercial real estate lenders, I would imagine those lenders don't value short-term leases nearly as highly as long-term rentals.
Yeah, I mean, commercial, especially the traditional guys,
some Walker Dunlop or someone like that, right?
They love fixed revenue, right? Fixed returns. This unit's going to get me $1,200 a month on a recurring basis for the length of this lease. That's not what we do. We'll have months where we're getting you $2,500, other months where we're getting you.
You're almost more like. I mean, it's a bad word nowadays, but you're almost more like WeWork in the commercial in the office rental space, right? Like WeWork rentals are way higher.
Yeah.
And they're always changing, and so that's different to borrow money against.
Exactly, and that creates an issue. In our space, we've had short-term rental space had a lot of venture capital go into it, and there was a handful of firms, and their model was, what we'll do is we'll go in and we'll go to a multifamily building, especially during lease up, and say, hey, let's say Camden South End, I'm just making it up here, Camden South End, you're in lease up, you have 150 vacant units, we'll take 30 of those. We'll sign master leases on them. We'll reduce your vacancy by 20% overnight. and we'll turn those into Airbnbs. And of course, Camden's like, oh, great, I'll take it. There goes my.
But
my
their
vacancy.
lender doesn't like it because it's a completely different model, right? Or is that
Depends. Some lenders like it, others don't. Some lenders are okay with the fixed revenue coming in on a recurring basis. So those guys, there was a lot of traction with companies. There's some big ones. Saunders, a huge one that's raised close to $500 million. Stay Alfred raised close to 120. Lyrics was, I think, around 250. So there's a lot of capital, venture capital went into those businesses. Honestly, those businesses are now out of business. Saunders not, but Lyric is out of business. Stay Alfred is out of business. A few of the other ones are struggling considerably. And what happened with those groups is that they had models that were very liability heavy in the lease side of things and low on assets because they didn't really have any assets. Their biggest assets were contracts, contracts and furniture, and that's a depreciating asset. So what happened with those groups is they had to shut down. And what we've done over the last few months, we've actually taken over doors that they've shut down in a few new markets that we expanded into with our model, which is even harder to get lenders to approve, which is our model is more of a revenue share model. We can tell them, hey, we're going to generate you on average $2,500 a month, but you're going to have months where you're making $1,800 and other months where you're making $4,200. And lenders aren't as happy about seeing that kind of variability.
that volatility?
Yeah, volatility. It's a better term.
Interesting. Do you see the rent, do you think this is such a secular trend that the lenders do need to understand that? And because they can price it completely differently if they can wrap their head around, but I'm going to make $4,200 in certain months.
Absolutely, and we're starting to see some small steps to get there. There's a handful of lenders that have built programs exactly for that type of scenario where they lend to short-term rental operators and to short-term rental models. So that's being established, but we have a long ways to go. There's there's funds that are raising capital specifically to deploy on this type of product. It's going to take some time for the bigger guys to catch up.
But I think your strategy as a service provider, who cares who pays for it? Who cares how it gets funded? If you can just show ROI, then
exactly. I mean, our model is like we help you find the asset, we make that asset perform better than it could elsewhere, right, under traditional methods. And that increases the equity multiple on the asset, increases the IRR on the asset, which means that it gives you the ability to exit for a greater amount. So,
well, that's what I wonder, because I was sitting down with some friends who are in the commercial real estate space yesterday, and they were mentioning that there are now apartment buildings trading at a 4.25 cap, which is absurd to me. But it seems to be completely justified. And if you're trading completely on a cap rate and you grow your NOI, inherently the value of the property goes up. So if you can show a 40% increase in revenue, you're probably showing a 70% increase in NOI.
Exactly right. Yeah. Exactly right. And I think what we're seeing as a result of COVID is an acceleration of the trends that are going to lead to people accepting that becoming a norm. The way people are changing the way they travel, no longer wanting to stay in hotels. Try to find funding for a hotel right now, close to impossible, right?
Yeah.
And the way people are traveling, living as well, I think it's leading to that.
Yeah, to me, that's like cloud computing. Cloud computing is just a way of getting more higher utilization of your processing because you're sharing it across people, and you're doing the same thing here, right?
Exactly right. Yeah. Exactly right.
So
great analogy.
I'd like to talk about that hotel discussion. We hinted at it earlier, but to me, again, simple perspective, non-CRE guy, but it seems to me that you allow a property manager to operate more like a hotel than an apartment. Have you worked with any bankers or financial partners who are more familiar with the hotel side of the business? Because it seems to me if the hotel business is going away, but you're making things look more like hotel, than if there are lenders or insurers or any service provider who understands hotels, can they look at what you're doing and say this is more hotel, or is that just the wrong way of thinking about it?
No, I think it's the right way to think about it, and we've started those conversations. Those groups, it's not the right time to talk to those groups right now, unfortunately, based on the circumstances that they're facing and the issues.
They've got bigger things to do.
Exactly, but I think that's the exact right model of what we're going to do going forward once things stabilize and once they realize the impact of what's happening. Everybody thinks in the hospitality sense, everyone's grouping hospitality to be one thing, but it's really, they're uniquely different, especially the difference between what we do, a furnished product, and a traditional hotel. There was a study done by STR and AirBNB, which are some of the leading data providers in our spaces, in the hotel space and the short-term rental space. And that showed year over year, short-term rentals are down 5%, while hotels are down 65%.
Wow.
That's staggering difference, right?
Yeah, so if I know financing hotels, I'm more comfortable with short-term leases because a hotel isn't inherently short-term lease.
And the worst thing that can happen with short-term leases, you can always default back to long-term leases because it's the same type of product. You're not reimagining a product. Try to get, somebody long-term in a hotel.
Yeah.
It's not the same type of offering.
So what has your progress to date been? What kind of milestones do you think about? Is it number of customers? Is it revenue? Is it market share? Like what types of things do you look at, and what has your progress been that you're willing to share?
Great question. So overall, across our platform, we just hit 700 doors. So that's doors is kind of the way we measure the number of units that we have. So we have 700 doors, which is great. That's a combination of doors that we manage directly and doors that we service through our technology. We want to get to 1,000 by the end of this year. That's kind of our internal goal. So
and you're at what number right now?
700.
Okay.
700. At the beginning of this year, for transparency, we were a little bit over 100.
Wow. So you should be well on your way.
Yeah, we should be well on our way. We've won some big clients. We have some opportunities to take that even to the next level. So we're making some strong progress there. For us, we're really in an interesting spot right now. We're trying to figure out, we have a clear path to profitability. So do we pursue that path and try to get profitability as quickly as possible? Or do we try to put, more loftier goals against this? And does that mean to go raise capital, do something else associated with it?
Well, I'd like to ask about that. Have you raised money along the way, or has it all been funded by you and your wife?
No, so we did raise capital along the way. We raised $1.5 million about 2 years ago, and we've done a small note round since. And we were in the process of actually, right as COVID hit, we had another round that we were getting close to closing, and that's on hold now because of the circumstances. Everyone's trying to figure out what's going on. We're in a good spot. We have, we're not in danger or anything, so we're comfortable, but we're still trying to figure out, we feel like we're a better company than we were prior to COVID based on some of the things we've unlocked and the upgrades we've made to our operationally and through our technology side of things. So right now we're having that kind of debate of what's more important, revenue and growth capital, or do we get to profitability, and then that really opens up a whole nother set of doors.
Yeah, that's an interesting question. And I kind of vacillate between the two.
Yeah, it's hard. It depends on the morning where you wake up. It's like, okay, yeah. I get to this point and I'm great, and I don't have to worry about anything else. But if I get growth capital, I can get a larger market share. And
yeah, well, even growth, like when you're growing, you're not making money. I don't care how profitable your business is. When you're growing, you're not making money. You only make money when you stagnate. Not stagnate, but when you're flat, right?
Exactly. So it's the team right now is doing an amazing job. We're all working as hard as we could, and every single team member is a superstar. But then how scalable is that? But that's how you get the profitability. You watch out and how you spend money. So it's really it's a fine line.
So do you think on a quarterly time horizon, yearly, 5 years? Like how do you think about the next big milestones for Rabbu?
For us, it's quarterly. Of course, we have ideas of what we want to achieve in 5 years, a year, and 5 years from now.
It's so fucking far away, though.
But right, if somebody would have told you in January that we would be sitting here because of COVID and would have gone through this, you'd be like, yeah, you're full of shit. Get the fuck out of here. Yeah. No, you just don't know. So for us, it's quarterly. What is the next quarter going to look like? What are the most important things we can establish in this quarter, and how does that align with the grander vision of things, of where we want to get to? I think that's the only way to operate, especially these days. And still as a young startup.
So I think everybody hears this, but I certainly, in the circles that I run in, hear a lot about Proptech. And I think of it as a subset of fintech and even a subset of capital markets. But we hear a lot about Proptech. Do you think of yourself as a Proptech company?
We do. I think it's a combination of Proptech and fintech because we utilize technology within properties to generate higher returns on the financial side. So we're kind of in the middle. Well, you said Proptech is a subset. In this instance, very much so. We're utilizing Proptech as a subset of fintech. It's the real estate is just the best place to be. It's the world's largest asset class. It's where we've seen the highest returns continuously over the last 100 years. So it's the right place, right space to play in, and it's ripe for this disruption. It's been, people have been doing things a certain way for the last, 60, 70 years. There's so many, as we call them, dinosaurs in this space that are just so stuck in their old ways that there's so much opportunity here.
Yep, absolutely. So for somebody looking to get into commercial real estate or even Proptech, do you have any advice for them?
Yeah, I mean, educate yourself. So the first thing I'd probably do is I'd find a friend that is in the space and ask them as many questions as possible. Probably follow it up by attending some networking events in real estate or in Proptech, and kind of getting a feel for the industry, trying to see what problems people are working on, see if there's cohesion between what you're looking for, and then get started with baby steps. What I'm doing right now is just because it's convenient. Is I'm getting my real estate license because I can do it at my convenience at night, get the hours in. So just take baby steps. And see if it's really the place you want to be. And, the more you expose yourself to the opportunities, the more opportunities are going to come your way. You can't be shy. You just have to go out there and, be okay with rejection or feeling awkward and not wanting to be there.
That's great advice. And I think that does apply to exactly what I asked, which is commercial real estate or Proptech. Now let's specialize that. If I'm thinking about starting my own business, and I've never done it before, not in Proptech, but anywhere. Do you have any advice now that you've started your own business?
Yeah, I mean, honestly, it's a similar advice. Baby steps. I wouldn't spend hours and hours and hours in creating a 50-page business plan. That's not going to get you anywhere, right? You're just going to have a great business plan, but no execution. Create action items and take baby steps.
Yeah, Facebook probably didn't have a great business plan.
Right.
I'm going to guess.
Right. No, absolutely not. Why would you? I mean, it's, everyone's got great ideas. It's the people that execute upon those ideas. So do the little thing that makes you comfortable and see what the result is. And then keep taking other baby steps and baby steps. And that will eventually lead to something where you look around and be like, oh, what happened? How did I get here? Like I think it has to be a natural progression. It's not going to be like, okay, I have a business plan, throw that on the table, and then like, okay, what do I do now? Well, try to execute the business plan you can because you haven't taken any steps to get there.
Yeah, no, I like that a lot. Are there any resources or books that you find yourself routinely recommending to people who ask you these kind of questions?
For me personally, one of the biggest books was, I was, socially awkward and shy, and still am in a sense, but
I find that funny.
I mean, I think most entrepreneurs are. Well, there's a few I can think of that aren't at all, but it is what it is. But what I did for myself first, I started I had to coach myself and program my mind to be able to go out there. So I read a book called What to Say When You're Talking to Yourself that really helps you program your mind onto being ready for rejection and just taking in things that you wouldn't be normally comfortable with. And one of my favorite quotes is, you don't make progress in the comfort zone. And that's really what entrepreneurship is. So that's one, just that book, What to Say When You're Talking to Yourself. Yeah, besides that is create a circle of friends and mentors that you can go to with questions, and they will be supportive of you going forward. That's so important. Find the right kind of social infrastructure that will help you push through it. If somebody is kind of rolling their eyes if you want to start a business, don't still be friends with them, but don't talk business. Don't talk shop with them. Find the right people for you that will get you there.
Yeah, that's great advice. If you listen to what your friends, I'm one of my best friends, everything I've ever tried new, he's like, you're an idiot.
Yeah.
And eventually he was like, don't listen to me, but I still think you're an idiot.
Right. And to each their own, right? I mean, I'm sure he's happy doing what he's doing, and obviously you're happy doing what you're doing. So to each their own. That was one of my biggest lessons too, especially with my wife. Is you realize, she's a nurse. She does a great job. She's a great nurse. And I'm always like, why are you just happy? And it sounds terrible. Why are you just happy being a nurse? Why wouldn't you want to be X, Y, and Z? She's like, I just love doing this. I love serving people.
That's all that matters, though. All we care about is happiness. There's no other thing.
For sure. She came to me yesterday and she's like, I got some interesting news. I'm like, what's up, babe? And she's like, well, my boss wants me to take on the office manager position, and that'll be a great promotion. She's like, I don't want to do it. She's like, I don't want to turn into administrative work and do things that I don't enjoy. I'm like, okay, well then don't do it.
Don't do it. That makes it easy.
Right, exactly. You don't have to. We're all different, and honestly, it's a great counterbalance to me for her to have that kind of stability that she's happy with. That allows me to be crazy,
a little less stable.
Right.
Yeah. So, was there a single moment you knew you had to go out on your own? I know that you mentioned that you leased did a short-term lease on the space above your garage, but when were you like, I've got to go do this?
Yeah,
and maybe it was that Kick when you see Mac and what they're doing.
Honestly, it was prior to that, and it was one of the reasons I went to Kick. So, I think I mentioned earlier, I started like having anxiety and getting depressed, right? And I just wasn't happy being an engineer. And I have great friends that are extremely happy being engineers. Good for them. It just wasn't for me. I thought it was something I wanted, but you make a decision when you're 16, 18 years old to become an engineer. What the hell do you know, right? So I went out and started doing the engineering thing. I was unhappy and started developing anxiety and depression. And the kind of the moment that kind of just like was a smack across the face that I need to get out of this is we had our first child, and on, I think maybe it was like his 5 or 6 day checkup, my wife took him to the pediatrician to get checked up, and I went to the I guess general practitioner to get my EKG done because I was just like having anxiety of like, hey, now I have a kid.
I'm sorry to laugh at that, but
no, it's it's like, okay, there's absolutely something wrong in my lifestyle. I need to figure out what's going to make me happier. This is stupid. Why is that was kind of the moment I think for me where I was like, okay, you just like figure this shit out. You're not happy what you're doing. It's not worth this.
Yeah, no, that's really interesting that you were that self-aware that you could figure that out and self-assess it. So is there anything you know now that you wish you knew earlier in your journey?
That's a good question. I think a lot of my decisions that I made early on were kind of driven by my parents. My dad was an engineer, his dad was an engineer, and that's kind of the path I was going through. I think having the ability to think outside of the box of what the family was doing would have been extremely helpful early on. Mm-hmm. But it was just, I'm from Eastern Europe, it's just the way we do things. Mm-hmm. My dad's dad, my grandfather does something, my dad does it, and it's kind of natural traction for me.
At what point did you guys migrate to America?
To America in 98 when I was 12. But so what
So it was your dad, not your grandfather.
Correct. Okay. Yeah. So my dad pushed me in this direction. But yeah, so if I would have known earlier on that I didn't need to follow that path that my dad wanted for me, and I think a lot of people struggle with this, their parents have this vision for them, but it's really follow your heart. And my body, with the anxiety stuff, was telling me to don't follow this path. Even in high school, I was buying broken PlayStations off eBay and fixing them up and selling them. I was just like doing entrepreneurial stuff. I didn't want to go work in my dad's construction company. I wanted to like figure shit out.
Yeah. No, that's great. So I want to shift gears just a little. We could talk about that part for days, but I mentioned before, I know a lot of people who know you. How involved would you say you are in the local Charlotte startup community? And I'm doing air quotes here.
Yeah, I try to be as involved as possible. I'm a big believer in giving back. I feel like I have a decent relationship with most people in the space. And what I love about it, honestly, I feel like our community is interesting. So you have the OGs, right, with Mac and Amidio and Ross, and hope you're not offended yourself. And then we have
I'm very offended. How dare you?
Then we have the next generation of the Red Ventures guys, the Passport guys, and Have It Exchange, and then like the next step up from there.
You have the Alexes from 2U and the Mendes.
Right. Yeah. So
Skipper
like, I'm very close with those guys. Skipper, Skill Pop, Sam Smith with Vision. Yep. So I think all of us are very close. We actually have a lunch tomorrow, like a founders lunch, where we're all getting together. And props to Garrett at Huga for putting that together.
Tell all of them I said thank you for the invite.
Oh yeah, well, you're OG. You're not. We're trying to get to your point. So next time, next time you can teach us on how to be SB.
That's a skill pop class that will not go far. I can assure you of that.
I actually used to teach a skill pop class. on how to be an Airbnb host. Actually, it was decently well received.
That's a pretty cool class. Yeah. So how do you balance the needs of the community that you just described with the needs of Rabbu and with the needs of Emir and your wife and your family and everything else?
Yeah, I mean, first of all, my wife is a badass rock star. The first one to tell you that. I'm a big believer in servant leadership and giving, and knowing that that's going to kind of come back to you eventually. So, even yesterday, I had beers with a guy that is just a year into his startup career, and happy to provide him any feedback that I can. I think that's the way to do it. I think for Charlotte to succeed in startups in town to succeed, we all need to help each other out, kind of push each other forward.
Pay it forward for sure.
So that's what we're trying to do, and honestly, I enjoy it. And you can't as an entrepreneur, you can never be kind of too highbrow, too thick, too full of yourself to think this guy is too new to give me any kind of feedback that I need. No, there's plenty I can learn from him. There's plenty I can learn from my 6-year-old, much less from somebody who was in the grind if I was just solving a different problem. So I think to answer your question, it's trying to find a balance that keeps everyone happy. But I'm a big proponent of giving back to the community and providing support any way we can.
Yeah, I agree with that. So the 5 years you've been doing this, what's changed most in Charlotte?
That's a good question. First of all, I mean, physically, Charlotte's changed.
Yeah.
You were hanging out in South End or close to South End. Like when I first moved here, nobody was hanging out here. Same thing with Midwood and Noda. So physically, it's changed a lot. I think we're seeing a nice, fresh, a breath of fresh air with some of these new startups that are coming into town, and they're starting to establish a name for themselves, that are pushing local investors to think outside. There's more conservative boxes. We had a dog walking business that's raised significant capital here, a laundry business. It's not something that's normal for Charlotte. I don't think.
Spoiler alert, we're about to announce that we invested in Rent Ready. I'm sure you know.
Yeah, I mean, again,
Ryan and Will.
Great.
It's amazing.
I mean, Will is
next
incredibly
generation
impressive. Yeah. I mean, I think we're seeing some of that now that we wouldn't have seen before. So I think, and that's because of people like yourself and that have kind of established that to become a norm.
That's great. And I would say that Mac and Steve and that whole mafia.
Yeah, I mean, the OGs again, right.
Yeah.
I mean, it's, and, Passport, I know, is following suit. I know
Avid Exchange.
Is following suit. Red Ventures. We had people from Red Ventures
Map
invest.
Anything was sold.
Yeah, Map Anything. And I know, John Stewart's invested into a couple companies. So I think we're starting to see some of that kind of after effect of the first set of exits giving back to the community at large.
Yep, absolutely. What is the best part about starting and growing a business here in Charlotte as opposed to other cities? Not that you've done it in other cities, but
well, no, honestly, I couldn't imagine starting a startup with a wife and 3 kids on what I'm paying myself in San Francisco. There's absolutely no way.
Yep. Or Austin even.
Right, no, absolutely. There's no opportunity there. I couldn't afford the lifestyle that I have here anywhere else. So that's a big one. And again, the community being so small also helps because we're still all trying to push each other forward.
6 degrees to Kevin Bacon.
Right, exactly right. I mean,
I like to say it's 6 degrees to get to Chris Halligan or some of the other real godfathers.
If I need to talk, if I don't have a connection and I need help being connected to somebody, I need to ask Alex to you or Maggie or they have it probably, right? So there's ways to get there, and that's because the community is tight.
That's great. So what's the most challenging part about being in Charlotte?
Probably resources. I mean, as great as Charlotte is, it's still a young entrepreneurial community. I wonder often, not that I would ever trade it, it's like, what would this look like if we were in San Francisco, like some of these other companies that have raised hundreds of millions of dollars? It's like, what's the difference between us and them besides being in Charlotte? So I think we still need more people that have gone through this. And I think the great thing about us is that we're all trying to be, I know myself, I know Alex, I'm sure Maggie's the same way, I know Sam Smith's the same way. We all want to get to the point where we can give back to our community. So I don't think we're fully built out yet to kind of pass it forward as much as we could. So we're still too young in that instance, but I think we're on the way.
Yeah, the way I word that is we just don't have enough big exits. And big exits,
exactly right.
Big exits aren't what Yap was. Big exits aren't what Lending Tree was. Those are great exits, and there's no doubt that you need to have those. But big exits are AOL, where you have 3 or 4 billionaires minted, and you have
Yeah.
thousands of millionaires, and
Yeah.
you have all these skills, and it just explodes, and you get unimaginable
Access to.
multiplication of
Yeah.
all of that. Yeah.
Yeah.
And I think that's what we need. But I'm very encouraged by what I'm seeing at Avid, what I'm seeing at Passport, a
Abbott,
handful of others,
Red Ventures. And
Red Ventures, exactly.
Trasada's kind of under the radar, but
Yep.
they're doing their thing.
Yep, absolutely. Well, look, Emir, this has been great. I really appreciate you sitting down with me. I look forward to our next interview when you've raised the big round of capital, or you're exiting, or you're doing whatever. But thank you for doing what you do. I really appreciate it.
Of course. Thank you for having me. It's been a pleasure.
Awesome. Thanks. Cheers.
Cheers.